remind us why we're seeing a sell-off in companies like Carnival and Royal Caribbean today, please.
Well, there's a number of factors. I think the number one factor really is the Walmart outlook. Remember, they beat the street, both in terms of the top line and the bottom line, but it's the very muted forecast. In fact, it's the first time in 3 years that they've actually forecast for a slightly reduction in earnings. And I think that has the street spooked. Now, remember, Walmart's not just any company, it's the largest retailer on the planet. And so it's literally a key barometer. And I think what's going on here is most of the cheerleaders for the market, yours truly and other Wall Street types, haven't really wanted to say that the tariffs are going to have a negative effect. We're very confident it's just a negotiating tactic. I think Walmart's taking a much more conservative outlook on that and is factoring in the possibility that tariffs could hurt the sentiment and the consumer buying power of its customers.
And it looks like, let's have a look at Royal Caribbean, RCL, or Carnival, CCL. It looks like remarks by that new Commerce Secretary, Howard Lutnick, saying, you never see American flags on cruise ships, implying that he's looking at a tax crackdown on the industry.
Yeah, absolutely. So that was a industry-specific problem for today. Mm-hmm. And it's true that they usually fly a foreign flag. It helps them with their taxes. Most of their employees are not U.S. citizens. They come from overseas. They have all sorts of perks as a result. Of course, for the most part, they're not based in the United States. They're often based outside and fly and travel outside of our waters, but that certainly did help them. But again, I think it's part of this broader knock on consumer discretionary stocks. If Walmart's right and we should look for slightly slower consumer spending going forward, the cruise ships would be a natural target of that slowdown.
Right. What's the deal with Alibaba? That stock has been rallying lately, and it's up sharply again today. It looks like a revival of its cloud business, pleasing investors.
Yeah, absolutely. So, when you look at the Chinese tech landscape, you've got to go right to Alibaba as number one in e-commerce, number one in AI. And I'm thinking here, it never hurts to travel to Mar-a-Lago to meet with Trump. Well, for Jack Ma, who's the legendary founder and leader of Alibaba, it never hurts to go travel to see the Chinese premier Xing. And in fact, he was apparently the only tech guy there. The other companies, Tencent, JD, for example, did not have representatives, which gave them some extra luster. And of course, the whole Chinese market, particularly the tech stocks, are trading at a fraction of what equivalent companies in this country are trading at. So all these things have combined for Alibaba's now up about 50% year to date.
Yeah, it's interesting as well. Apparently, Alibaba is opening a data center or a cloud center in Mexico. It's going to be its first one, reportedly. So spreading to this hemisphere. Palantir, the software company that sells a lot to the military, that stock has seen some selling.
Yeah, absolutely. So, this is the spear tip of the momentum trade of the AI tech trade, a stock that was up about 8-fold last year, just been phenomenal. However, when you're trading at that type of valuation, I think it's 105 times forward earnings, 800 times prior year earnings. There's just no room for any kind of mixed news. And of course, we are now hearing that they have asked the various generals, the Grand Poobah and the U.S. Army to go and look at the various reductions they can make in their units. And people are thinking, part of the promise of Palantir is that they're going to bring AI into the military. But if the military is cutting back spending, that does not bode well for as much spending as investors have bid up into a company like Palantir. Remember now, most of the investors in Palantir are no longer professional investors, the hedge funds and so forth. It's really moved into the retail crowd. Unfortunately, often the retail crowd gets in there late and it gets burned here.
I remember reading a comment, I think it was a military blogger, talking about the U.S. military planning this globe-spanning, internet-connected web of information, but saying, but it'd be reassuring if they could get the PowerPoint presentation to work at the event I'm at today, in any case. Carvana, a big player in the used car market, which I didn't realize was so fragmented. Apparently, Carvana has only about 1% of the used car market in America. That stock disappointing, it seems.
Yeah, well, absolutely. I mean, actually, they had very good earnings and so forth, and they have a strong forecast in terms of EBITDA and so forth. And of course, as you point out, with only 1%, they've got a long runway for potential growth. But again, here's a stock which has gone up triple digits in the last 12 months. Here's a stock that just 26 months ago, it was a 1 billion market cap. Now it's nearly a 60 billion market cap, so a 60-fold increase. So the valuations, again, are nosebleed and so forth. They do have a little bit more debt. And of course, there is a concern that with the tariff situation and so forth, the uncertainty, that there's a bit of a cloud over the entire auto industry.
Thank you very much, David. Always great hearing from you.
Thank you so much.